Money day, guys and girls. I hope you're all blessed. You know the vibes. It's lit side. You're with me today, your host Vel. You're learning with Vel, and I really wanted to break down to you guys how simple it can be to understand correlating pairs inside the currency and the commodities industry. Now, with that being said, of course, wherever you're watching this video, if you're watching this video on YouTube, be sure to like, subscribe. You know the vibes. It's lit side. And of course, if you're watching this video through personal invitation, be sure to reach out to the person who sent you this video once you finish watching it. Now, with no further ado, what I want to do is bring you guys to the attention of the DXY. Now, the DXY, I like to call this the DX Dizzle. The DX Dizzle is simply the United States Currency Dollar Index. What does that mean? Well, the United States Dollar Currency Index just simply means this is a chart, which we can see here on the screen right now. This chart shows us the strength, okay? The strength. It shows us the strength, okay? I wish I could insert that meme. Look at the strength. Well, this shows you the strength of the DXY, right? If the DXY is pushing up, that means the United States dollar is also going up. If this is coming down, then that means the United States dollar is growing weaker. It's becoming weaker and weaker and weaker. So I want to give you guys a cheat sheet. Okay, this is a cheat sheet for those who are beginners and even those who probably haven't realized this before when it comes to trading currencies as well as commodities against the DXY. Now, if the DXY goes down, ladies and gentlemen, this means that whatever pair we're trading against the United States dollar will go up. Okay, so for example, if the DXY goes down, that means Euro USD will go up. XAU USD will also go up. We can see it. We can see it here on my watch list. Excuse me. We've got two here. We've got Euro USD and XAU USD. Okay, so the DXY is currently at the moment. Let's have a look on the weekly. The weekly candle is currently bullish. The previous candle was bearish. The previous candle was bullish. So if we look here, we can see the previous candle was bearish and this current candle is also bullish, right? When we have a look on gold, we can see this current candle is bearish and last week's candle was also bearish. So we're seeing that direct correlation between the correlation of the DXY going up and the pairs against the United States dollar going down, which is against it. Okay, if one goes up, the other goes down. Now, if the DXY goes up, okay, we have to remember here that we've got quite a few major pairs. We've got Euro USD and we've got XAU USD. The only major pair we have on this list is Euro USD, USD JPY, and USD CAD. The only major pairs are pairs that have USD in their name. For example, you've got Euro USD, AUD USD, GBP USD, NZD USD, and then you've got USD JPY, USD CAD, USD CHF, which is Swiss franc. So you've got quite a few major pairs. We're only going to focus on one. I'm going to tell you this, guys. Euro USD is the easiest pair to trade in terms of it being correlated to the DXY. If I show you guys what GBP USD looks like, you'll see that it doesn't give you that exact symmetrical reaction. You still get a reaction, but it doesn't give you the symmetrical reaction. For example, look, the DXY right now is, the last candle was bullish. This candle is currently bullish. Look at GBP USD. The last candle was bearish, but this candle is currently bullish. Look at Euro USD. This candle was bearish, and the last candle was also bearish. So in terms of us getting that symmetrical correlation, okay, cross correlation between the DXY and the majors, we can see here, guys, that we are really getting that with Euro USD. I know I haven't added all of the other majors, but I don't need to because I know exactly what I'm looking for and which ones are directly correlated to the DX Dizzle. So with that being said, I want to show you guys why I say this is a cheat sheet. It's very simply, guys, if we want to go down to, let's say, the 4-hour time frame, okay, now we understand right now that the New York session is upon us, okay? When the New York session opens, each day we're going to have an increased volatility with the United States dollar currency. So because of that, what we should understand is with the DXY, guys, when the DXY pushes up, this is going to give us a reaction for Euro USD, XAU USD to come down lower. Therefore, it is always the most advisable thing to do, which is to find your liquidity areas and target why price would go higher against why price would go lower. If there's more reasons for price to go above, then of course, we've covered this in previous sessions before, talking about the equal highs and equal lows. But if there's more reasons for price to go above than there is below, then of course for us, that simply means that we can have a better understanding that price could potentially go up. But then this is when it comes really beneficial. Okay, it becomes really beneficial when, for example, if we see that the DXY needs to go higher because there's more liquidity above than there is below, then all we need to do to confirm that here on Euro USD is we need to see the complete opposite picture. Okay, if we can see the complete opposite picture to what we're seeing on the DXY, then that means we can have our analysis is strengthening. Okay, I'm not expecting to have the same picture on XAU USD with Euro USD. Okay, one's a commodity, one's a currency. I don't expect to see the same picture. But what I do expect when it comes to the DXY, if I'm seeing liquidity above for the DXY, then I should be seeing liquidity below when it comes to Euro USD. And that's what we can see. Okay, we have an equal low here, we have one here, and we've also got a nice juicy equal low down here. Okay, so there is money below. We can very visibly see that there is more money below. So that can support one of our theories for looking for a short when it comes to cross-correlating the DXY and the Euro USD. Now, I want to head over to USD JPY and USD CAD. These are two other majors. I don't trade USD CAD and I don't trade USD JPY. However, with USD CAD, it does have a correlation between USD CAD and US oil. So as you can see down here, once upon a time in July, I marked for price to come all the way up to this area. And so far, price has really, it's nearly come exactly to where I wanted it to. But ultimately, if USD CAD, let's see if I've got the drawing on here to show you guys. If USD CAD goes up, oil will come down. Okay, so if we look here, we can see the cross correlation. This looks like it's going to come down, I'll be honest. But let's just take the last few days into example. We can see the last few days has been bullish. Let's type in US oil. I'm going to look at this one here. Now, US oil will be the exact opposite to what we can see. So look, this current day is bullish. And if we have a look at the current day for USD CAD, it's also bullish. So we're not getting that exact we're not getting that exact symmetrical cross correlation, unfortunately. But what we do get is an overall consensus. Okay, meaning on the monthly we're bearish. Okay, for US oil. On the monthly for CAD we should be bullish, which is what we can see here. Now, even if this candle has not yet pushed up to show us a bullish candle, we can still see that we are bullish. We're still in a bullish phase, and with US oil we're in a bearish one. Right, we're pulling back. So when we go down to the hourly time frame, what I'm showing you guys now on the hour compared to USD CAD, okay, is ultimately when we look at USD CAD, which we can see here it's bullish, and we can see on oil it's bullish, okay, even though oil is slowing down. What we're mainly trying to take into consideration is the strength of the Canadian dollar. There's a large oil reserve in Canadian dollar, which in Canada, which is the reason why we take into consideration the Canadian dollar. So what we're saying here is if we tend to see that the USD CAD is pushing, we are then going to see a price reversal, because if USD CAD is going one way, we can expect oil to be going the other. Now, this is just to give you guys a consensus, right? I'm not saying that because we're seeing USD CAD flying up at the moment, we should start to sell US oil straight away. No, we shouldn't, guys. But we need to understand, if USD CAD is pushing down lower, okay, then that means the Canadian dollar is stronger than the United States dollar. And in that instance, what that is saying to us, because if I give you another pair to break down or another pair to understand, AUD USD, okay, it's a major Australian dollar against the United States dollar. The Australian dollar is the most heavily backed. It's the closest commodity backed currency, meaning some of the largest gold mines are in Australia. So usually what can happen is when gold is pushing up or pushing lower, because a lot of the business for gold is done through the Australian dollar, this can affect the Australian dollar's strength and weakness. It's the exact same thing with the Canadian dollar. Now, we're not saying that that is the only factor that can implement strength or weakness to the dollar, to the Canadian dollar or to the Australian dollar, because it isn't. But it is a heavily factor that can weigh upon the Australian dollar pushing up when a large amount of gold is being sold, and it can weigh upon the Canadian dollar being strong when a large amount of oil is being produced and being sent globally. Okay, any transactions that's taking place is going to affect this currency. So I want to bring you guys to these two pairs here, which is Euro NZD and Euro AUD. Now, for those of you who know me, who have been inside any of my communities over the past 5 years, you'll know that I have made an absolute killing when it comes to Euro NZD. This has been one of my favorite pairs. It's been a pair that sometimes can be very stubborn. It's been some of a love-hate relationship, but ultimately with Euro NZD and Euro AUD, these are pairs that if you're starting to learn how to trade, or if you've been in the trading game for some time and you want a bit of stability, these are your two pairs in the currency market that will never fail you wrong. So what I mean by that is if we have a look at Euro AUD and we have a look at Euro NZD, what will happen is between these two pairs, okay, one will always move before the other. Meaning, if you have a move, if you have a setup, an analysis that you want to play out on, let's say, Euro NZD, but price is not yet at your area of interest, chances are the price will be at your area of interest with Euro AUD. Vice versa, if you have something that you're looking for on Euro AUD, chances are price will probably be where you want it to be with Euro NZD. Okay, now this is something that I realized over quite a long space of time. If we see here on a 4-hour time frame, we've got Euro AUD coming down lower, right? Now Euro NZD is yet to come down, and that could be for one or two factors. One, the Kiwi, New Zealand dollar could be weak. Two, price might be waiting to actually push up inside of a specific area before we get that reaction. But what we have to make sure we understand here, guys, is if the euro is weak, the euro is weak. Okay? Now, if the euro is weak against the Aussie, chances are the euro will be pretty weak against the Kiwi as well. So it's important, guys, to have correlating pairs on your watch list just so that you guys can have a breakdown and so that it can also be easy for you guys to visualize what's going on. Sometimes when people are telling you to do this and to do that, it's very hard to visualize it. What we've been able to visualize today is if the DXY comes up, Euro USD is going to come down. Okay, we've been able to visualize that very clearly. Okay, it's the same with GBP USD. If the DXY is flying up, then GBP USD will be coming down. But what I just find is that the movements with Euro USD are much more smoother. With GBP USD, price can do exactly what we want it to do, but it may pull back. It may be a bit costly. Whereas with Euro USD, the pullback's not going to hurt the bank account. So when we're having a look now at other pairs, we've got, of course, Euro NZD, Euro AUD. These are two pairs always to look at each other, guys, okay? Another two pairs that you can have is GBP NZD and GBP AUD. Hold tight, my GBP AUD traders. I met a guy once, I said GBP AUD, he said GBP AUD. So that's what I say from now on, GBP AUD. So GBP AUD, we see now with GA, for an abbreviation. With GA, we see it looks like it's really been consolidating to potentially push down lower. And then we see here, that's kind of same thing. It's been consolidating, but now it's pushing higher. So if we see prices starting to push higher with GN, chances are prices will push higher with GA. I don't want you guys just to believe what I'm saying. I want you guys to check this out for yourselves. I want you guys to watch this video over and over, make sense of what I'm saying. Sometimes it might sound like Spanish. Estoy aprendiendo español, pero mi español es muy malo. So I hope that's it for today's session in terms of you guys understanding what I'm saying. I really, 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 really want you guys to make a watch list and just be a bit organized, guys. It's okay if you're new to trading. It's okay if you've got a bit of experience, but you've never really looked at correlating pairs. This is going to help you have more clarity in what you're doing. And it's also going to make you remember that even if you miss an opportunity here, you've got another pair to potentially catch the same move on, if not bigger. So that's why it's important to have correlating pairs. I'm looking at Euro AUD and I'm thinking this is going to come down. But I know that unless price pulls back up, I've missed my opportunity to take the short. So when I look at Euro NZD, okay, now Euro NZD is coming down. A second ago it wasn't. But what that just gives me with Euro NZD is it gives me a bit of time to say, look, price has not yet left the station. It hasn't taken out any of the lows apart from the lowest taken right now. There's still time. So guys, always remember, you need to live to see another day when it comes to trading. Don't burn yourself out by going hard on one pair, on one chart. Keep things simple. Keep things very, very simple. There's a lot of different concepts out online right now. And whether you're a member of my personal community, the APG University, or just a member of the internet and just simply seeing how this video can impact your trading career, it's very important, guys, that you click the link below, see how you can engage with my community, see how I can help you, and most importantly, guys, see how you guys can accelerate to the next level. I'm very tired of seeing traders coming around, giving it a go, and pretty much saying trading didn't work, so trading must be a scam. This is not a get-rich-quick scheme, guys. No one who enters this market is going to become a millionaire overnight. Anyone who thinks that is going to end off broke real quick, real soon. So I want you guys to make sure that you're listening to the right people, that you've got the right advice. And look, if you have any questions, any videos, any topics you want me to cover, comment in the section below and I'll be sure to go over those. But make sure if you're watching this again on social media, on YouTube, make sure you like, subscribe. You know the vibes, guys. It's lit side. Thank you guys for watching, tuning in. I've been your host. Always remember that every day is money day. Peace.